Good morning, good afternoon, good evening, whatever time of day it is, wherever you are. Welcome to the Friday Fix, where myself and the amazing AlphaPicks team will be giving a roundup of the major stories and themes of the week. I get the impression that this script would have been, if it was pre-wrote, would have been rewrote this morning based on everything that's happened. But we'll see what happens. And, as usual, when in fast markets like this, anything we say is good and is guaranteed until we end the podcast. In which case, if you're listening to this on the playback, it's probably all out of date anyway. How are we, gents?
That was a fabulous intro, right? I mean, that's
Thanks,
almost
mate.
like Bloomberg anchor worthy. You know what I mean? Like
Thanks, mate.
snappy, concise,
Well, do you know
interest
what?
arousing.
Considering I'm still not fully recovered from Vegas, so this is the first day that I actually feel remotely, in any way, shape, or form, human. So I'm quite
Yeah.
proud of myself. I'm not gonna lie.
Yeah. No, I think definitely the Vegas stories hopefully will disseminate themselves into Friday fixes in the coming weeks.
Well, I would save them more for a beer with us two, with us three.
Yeah.
Sorry. Speaking, Jesse, what's going on with your line? Because it keeps getting a load of noisy static coming through.
Oh, okay. I don't know. I'll stay muted when I'm not chatting. Maybe that helps.
Okay.
Come on, Jay. Come on, Jay.
Well, look, at least he turned up for the last show, unlike yourself.
I know. Yeah, that was a tough one. We'll come. That's another one for the pub. But we will. People do not pay us for talking about our pub stories.
No, exactly.
They talk us to talk about the markets. And it has been a busy week, let's put it that way. And I suppose it makes sense to start with the most relevant news from overnight and this morning, which was obviously the news that Israel launched a wave of airstrikes on Iran, particularly targeting their nuclear program, ballistic missile sites, etc. And it's an interesting one because, we've seen the sort of reaction, notably in oil, obviously up 13% before coming off. And you saw the classic move of, gold was well bid, Swissy was well bid, S&P futures were off about 1.5%. But I mean, I'm interested to get both your views. It's kind of one where at the minute, I'm not really too concerned. And I think, you'll probably see asset prices, maybe not by close of play today, but certainly over the next sort of 2 or 3 trading days. If there's no significant escalation from here, it's kind of the same situation that we have seen, let's be honest, on multiple occasions over the past sort of 2 or 3 years of strikes and, poking of the bear, as it were, but really nothing materializes from that. So from where I'm stood, we'll see a bit of tit and tat from here, but I would actually expect most of these asset moves to reverse over the course of the next sort of 48, 72 hours.
Yeah, absolutely. Obviously, it's caveated with this is based on what we currently know. Things could escalate dramatically from here, and in which case the market reactions will escalate dramatically. But as things stand, and obviously caveated out of my arse at this point, it's a technical term for you. Yeah, I completely agree. One thing I've always said, not that I've mentioned it, back in the day when I used to trade oil, any missile attacks on Iran or anything to do with Iran does not instantly mean $100 oil, which a lot of the Twitter pundits, the same talking heads that we always kind of have to berate, always seem to claim. We really need to see direct attacks on Saudi oil infrastructure, direct attacks on active refineries. We've seen in the past, the reason why I stress active is because we've seen in the past missiles hit refineries that turns out they were kind of being discontinued or being wound down at the time. Now this is all chosen for, that's more of a strike for optics to say, look, we're attacking this one, we could attack other ones. So it really does matter what is being hit and what is being targeted. At the moment, no oil infrastructure is being hit. Hence why we've seen the initial, oh shit, Iran's involved, let's buy oil, and then wiser heads have prevailed and faded the bid. And to be honest, that's a move that I think we've said multiple times on the show. I've definitely said it a gazillion times on Twitter. After anything like this happens, the best trade you can ever do, and it's got like a 100% win rate, if something happens overnight or over the weekend, that initial spike higher in crude, you fade that, and it pays off. Obviously, you got to caveat that with saying nothing that we say here is trading advice or anything like that. Get the legals out the way. But we really do need to see Iran start targeting Saudi infrastructure, and people suggesting that they're going to close the Strait of Hormuz, just to really nail on this one straight away. The Iranians closing the Strait of Hormuz would be the very, very last ditch kind of salvo, or whatever you want to call it, that they can do. One, because it handicaps them more than anyone else. They need to get oil out and to their Chinese buyers and whatnot. That's the only income they've got, basically. If they shut the Strait of Hormuz, they are cutting their own lifeline off. Not only that, but any proxies or any elements within the rest of the Middle East that are dependent on oil that are favourable to the Iranian regime, straight off the bat, they lose favour with them. So they lose their ties, they lose their economic ties with them, and their kind of safety nets and all stuff back there. It's literally the worst thing they could do. And also, once they do that, that means the US are going to get involved, and they're going to bomb the regime into oblivion.
Yes.
And it'll be the end of the regime if that happens. So, yes, of course, they can block the Strait of Hormuz. I remember years ago I did quite a deep dive in it, and basically it would take like 2 or 3 strategically placed sunken ships, like super tanker size, to block the whole strait. And then when you do that, that's a very big operation to then, in terms of the salvaging, to kind of reopen the strait. But again, I stress, I don't think it's likely. And I think if we do see that, then we've got bigger problems, because all hell will kick off in the Middle East if that does happen. But yeah, so beware, basically, TLDR, beware anyone that is suggesting that this is kind of one of the first things that Iran will do, because it's definitely not.
Yeah, you've hit it right on the head. I was literally exactly the same points I was going to make in terms of shutting that trade channel lane. It basically chops their own arm off. So it's very much a last move for them to go. I think you've hit it on the head. And the other one is a good sort of proxy, I think, for how we'll take this and market reaction will go from here, is obviously looking at the S&P 500 futures, which obviously have actually raised, I would say, about half of the losses already, and we're still, a way out from US Open. So I think, that'll be definitely one to watch into the afternoon at US Open, just to see how people take it when New York comes online. But
Here's one for you.
The indications,
Here's one for you. Right, so a little. We'll have this. We'll have beers on this between the three of us. I'm going to say that it might not close up on the day, but I'm going to say the S&P at least trades up on the day during the US session. Anyone want to take the other side of that for a nice bar bill?
Jay, you want to take the other on that?
Hey, you little shit.
I mean, I kind of agree with you, Ryan. Yeah, I mean,
with that case, Jay, do you want to take the other side?
Or is there no play there? No. Okay,
Jay?
He's not taking it. He's not taking it.
Hello, Jay. You got to talk when you're on mute.
No. Okay, we've lost him. We haven't got him. I think we're both in agreement on that one, Ryan. So the only thing I would throw in there as well, as a small caveat to SP finishing higher, is obviously the past I'd probably say past couple of weeks, this has become a little bit more of a hated rally. In terms of people trying to get short. And so the only I would say is that sometimes, it only takes like a catalyst or a spark like this to basically liquidate some of the longs. And actually, you either see the dip being bought, as we might have seen already, or, this is the caveat that basically people use an excuse to send markets a bit lower. But we'll see on that.
Yeah, no, I see that. I see what you're saying there. Jay,
Hello? Can you hear me now?
Yeah, we can hear you. Right, so question for you, Jay. Do you think the S&P doesn't close up, but at least trades up on the day during this US session?
So I could actually hear you both. You just couldn't hear me. I was going to say, just to add on to both of your points when you were talking about it, I do think the dip in equities will get bought, so it will trade up in the day, so I'm not taking the other side of it. It tends to always be the case with US equities, like it's a dip is always one to buy, because unless the US get involved or it was something in the US, then it's never going to be have like severe consequences. However, I would note that because it's the Thursday night thing that happened, going into the weekend, you might see a little bit of risk off at the end of the day, therefore like the S&P closing red. But I do
Yeah.
think at some point we will be unchanged or green on the day.
Yeah,
But yeah, I
no,
wouldn't
that's
be
fair.
surprised if people just de-risk into the weekend.
And I think you'll see that, especially like in commodity markets as well. I think because even though we're sat here saying that there's every chance that there's going to be no impact to crude flow, do you really want to take that chance over the weekend?
Exactly. Yeah, exactly. And then moving elsewhere, I
Yeah, other
wanted to
things have
talk
happened.
about other things that have happened. Are the oh,
Oh,
I think that's you, Ryan. That's another good train wreck. The US dollar obviously yesterday closed at the lowest level since 2022, and it's an interesting one because the dynamics we're seeing now that all over the past sort of week or so that have driven the dollar lower are slightly different to the ones that have driven it lower over the past couple of months, in my view, anyway. Because what we saw obviously inflation come in slightly softer than expected. Potential for the Fed to start cutting more aggressively. You had like your Paul Tudor Jones notably going on saying he still sees further dollar downside. And it's kind of like, whereas before we had a lot of that inbuilt tariffs are going to be inflationary, blah, 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 that flipped, causing the dollar to start to weaken March, April. Then obviously we had the more domestic US story of shooting themselves in the foot because of the impact of tariffs. And now you're obviously seeing it being driven lower by this lower inflation narrative and the potential for further Fed cuts. So I think you've got so many factors hindering the dollar at the moment that I am actually in the camp as well, in that even though the move lower has been overextended, I think over the medium term, it does still head lower. However, as we all know, is that when there is a massive consensus view, which there is on the dollar heading lower, the trade can become very crowded very quickly and actually doesn't materialize. So I wouldn't be trading this lower in the short term, but I do think having some sort of medium to long term dollar lower exposure is probably a smart move from here.
yeah, I can see your point on that. Who was it? I saw someone, one of the talking heads. It might have been Jamie Dimon or something like that, suggesting that we could see 10% lower in the dollar over the next quarter. I can't remember exactly who it was. It's
That was
someone like.
Tudor Jones, no?
Oh, it was.
Yeah.
Yeah.
Oh, old
It
friend
was
of yours.
10%, right?
Yeah,
Yeah,
he
I
said
mean,
10%.
was it 10%? Yeah,
Yeah.
fine. Yeah. Which is a bit, from current levels, to see 10% is very much, I mean, obviously headline grabbing. Obviously Paul is a much better trader than I am, so, probably want to listen to him more than me. I struggle to see another 10% from here, just
Yeah,
because
I
of
do.
the dislocation that would
It does get
provide.
him in the news, though. It does
It
get him
does
in the
get
news.
him in the news, doesn't it? Yeah.
Yeah, and I am sat here in my usual Friday spot, just being joined with a FX trader to the stars, Mr. Johnny Gold of Goldhawk FX. I
Ah,
will be
yes.
asking him where he thinks dollar will be going after I've put the phone down to you two mugs and I've got the beers.
It is
Well, let us know.
it's a better headline than saying the dollar will go down 1%, isn't it? That doesn't quite grab the attention.
It's true. It is true. Yeah. And then flicking across to, let's do a bit on equities. The news that I was sort of looking at this week was Apple's worldwide, what does it stand for? WWDC, Worldwide Developers Conference, I think it stands for, over the course of sort of Monday, Tuesday,
I
Wednesday.
could have been very rude there, and the mature Ryan has come through.
Yes, yes. It can be construed WWDC many ways. In this case, though, I'm going to be honest. I was pretty underwhelmed by Apple's. I mean, I know the stock hasn't massively reacted either way, but I was pretty underwhelmed. Where it's kind of like they released liquid glass, which is basically just a fancy way of saying that they've sort of shifted around the visuals on the software in terms of how the apps look, which I wasn't crazy impressed with. And there was barely any sort of AI driven enhancements. Like the big one, which was AI Siri update, is going to be delayed until spring of next year, which was the latest headline. And yeah, basically they haven't sort of caught up in terms of AI functions. What they've released, in my opinion, are sort of novelty things. Some like the call screening, for that, I think that's a very clever idea. They've got some very clever bits and bobs, but intrinsically, it's not the kind of breakthroughs that we're looking for when you compare it to sort of other names in the tech space. So
it's like same old from Apple then, basically, isn't it? Oh yeah, we've done the same thing, but it's in a different colour.
Pretty much, yeah. I mean,
Yeah.
I'm happy to be corrected. Jay, you got something on this?
No, it's very similar points. The kind of developments that they made were kind of stuff that you would have expected a couple of years ago. Like with how tech's changing, tech's making like leaps rather than steps, and I feel like Apple is still making steps at the moment.
Yeah.
I think the one saving grace with Apple is they are very big and they have that kind of locked in ecosystem, especially in the US, how WhatsApp's not very big, so everyone needs iMessage and stuff like that. So they do have that fundamentally supporting them, but I think there will be a time where the market really starts to question like what they're doing with AI. And if they do fall too far behind the curve, like they could be knocked off their pedestal. Like not saying that it's the end of Apple, but at some point the biggest company in the world stops being the biggest company in the world. And I do think that will be down to AI when it comes to Apple.
I think an interesting... Oh, Jay, are you there? It's almost like he dropped the phone down the back of the sofa. That got a bit weird. I get what Jay's saying. One thing again, this is smarter people than me telling me this, but with Apple and Google, funny enough, they were saying this about Google last year, and I kind of just ignored them. Everyone was saying similar about Google. It was like, well, where's Google's AI? Are they going to be left behind? Then all of a sudden, they released something that blows everything else out of the water. And it's the reason they've done it like this is because they're not trying to show every iteration. They're confident in what they're building, and they release it when they think it's great. And I'm hearing similar things about Apple. Like Apple are working on AI. Apple doing some significant things on AI. And the only reason they're not kind of singing from the rooftops about it yet is because they want to get it much better, or like they want to get something substantial together before they release it. It'd be an interesting one because I know, if it follows the same process as what we saw with Google, I think it will be a significant step up or leap up as opposed to what we're seeing at the moment. Because like Google's at the moment, 3 months ago people were saying Google's been left for dead in AI. Now all of a sudden it's Google's the best model out there. So yes, I think it's these bigger companies have, they don't need to be trying to pump every iteration. I think they can sit back and they can really get their product together before they launch, as opposed to these OpenAI and all these other companies. They literally need to make a big song and dance on every iteration just to keep keep funding coming basically and keep the kind of engagement there.
Yeah, valid argument. Although I hear you on that. Then switching lanes again, closer to home, UK, where we had a dismal Thursday monthly GDP data. Awful. The worst reading in a year and a half. The economy contracted 0.3%. Exceeding the 0.1% decline that was meant to happen. And people might just think, well, this is one data point, what's the big deal? And yes, you need to be careful on reading too much into one data print. But fundamentally, the problem with this is that the Labour government, and we're not being political here, but just the government in power, their fiscal policy was that they were going to fund spending thanks to the economic growth that the UK was supposed to have over the course of this year. And fundamentally, if you're not having your economy growing, and in fact you're having it contracting, you therefore cannot have a meaningful fiscal policy. And therefore, if you can't finance your fiscal policy that way, how are you going to finance it? Well, through higher taxes, et cetera, et cetera. And obviously that then puts pressure on growth further. And if that wasn't enough, you've then got the Bank of England that really aren't in a rush to cut interest rates anytime soon. And in fact, their last meeting was obviously a 5-4 split, which is just a complete mess of two of them not wanting to, two of them calling for a larger cut. They're all over the place. So I just think that soon, and I wrote about this today, which you can have a look at, but I do think you're looking over the second half of the year of expressions of the UK disappointing, because, without that growth, your economy is basically cooked.
Well, yeah, absolutely. It's like we saw like employment as well. It's everything's going wrong. And unfortunately, it's all stuff that as soon as Ree's brought out her kind of decisions that she laid on the table at the last budget, mini budget, whatever we're calling it, with national insurance, lowering for employees, but only because employers are paying more for it. Everyone called it straight away. They said, look, if you do that, it's going to have a direct impact on hiring, because it costs more to hire now. And you've got the Labour government sitting there saying, no, don't worry, it won't impact anything like that. It's like, look, we're being run by politicians that have never, ever ran a business in their life. Like, their CV is literally head of the student union to becoming a minor MP or a policy, or running a dog's body for a politician. It's a joke. Anyone with any business sense knew that this was coming. Yes, okay, you can't predict tariffs, and you can't predict that. But half of what we're seeing is nothing to do with tariffs or anything like that. It's simply because, the economy is stalling in the UK, because why invest in the UK right now? Why increase your labour force in the UK? It's just ridiculous. I've got a company. It's a very small company. It's still costing me an extra 25, 30 grand a year now. I'm a tiny company. It's just it's utter bullshit. Anyway, that's me getting off my soapbox.
Yeah, agreed. Yes, that's our objective.
Sorry about that.
Macro view of the UK. So, which is not, we don't have any conflict of interest in that regard. And the last one, a little interesting one for us to finish off on this week. I saw a little story, which got a little bit of press, not a huge amount, was that Treasury Secretary Scott Bessent, a friend of all of ours, is being considered as
friend of the show.
We'll get him on. He is apparently up there to replace another friend of the show, Jerome Powell, as the next chair of the Federal Reserve.
Yes.
And if you're there thinking like, well, hang on, like, how have we got to this situation? But it's basically Powell's term ends in May of next year, so he's actually got less than a year to go. And obviously, historically, pre-September of the previous year is when the next person gets announced. So it is kind of, over the next couple of months, the successor should get named. But according to sort of conversations and, people that cannot be named for whatever reason, Bessie, old Scotty, is up there in the mix, which I think would be very interesting. Scotty B. So, I mean, what do you think? You think he's got a realistic chance of happening, or not convinced?
No.
No.
No. Quite frankly, no. I can't remember who. Michael Brown's going to kill me for not remembering. There is one of the FOMC members who's currently there, who's actually Trump is a big fan of, and I think Trump's put him forward in the past. It's killing me. Basically, there's another FOMC member that Trump does like. I think that's who we'll get. Or that's who Trump's nomination will be, should I say. I think Bessent is just, Scotty B is just being thrown in the mix as just, just Trump messing around, basically. We know Trump loves playing political shithousery. And that's what I think this is. I don't think Bessent's got any chance saying that. I'd love to see what the poly market odds. I don't think he's going to be looked on favourably by the market. And we know for a fact that the market needs to approve and give the thumbs up to whatever the choice is. I don't think we'll see Scotty B in there. I think his name would be thrown around by Trump, etc., purely for shithousery. Technical term for you. I don't think he's got a realistic chance of becoming Fed chair.
Yeah, and because the other one, and it's something I actually want to look into a little bit more detail of the process, but from what I saw and was reading is that the Treasury chief actually has a role in the search and even in the interview process for the next Fed chair. So, it's kind of, I mean, it would be very sort of convoluted to be interviewing potential candidates and offering your opinion to the president on who should be there if you yourself are kind of also in the mix. I mean, it just doesn't quite kind of sort of sit there. But hey, I mean, that's one to keep an eye on.
Yeah, exactly that.
But lovely. I mean, those are all the main things from myself. I don't know if anyone wants to throw out anything else they've spotted this week. Interesting.
If my connection stays here, probably the only other thing to point out from this week was just in the bond market, so a similar topic. Obviously, bonds have been under a bit of pressure on the long end with all of the big beautiful bill and the deficit concerns. But there was an auction of the 10-year and the 30-year. I think there's 22 billion auction for the 30-year, which was well received by markets, which has kind of eased a bit of concern in treasuries. So, yeah, I think I've probably had a bit of a bearish bias on bonds, but I think for the short term, probably go more neutral if the markets are buying the bonds. Yeah, there's like strong demand for bonds at the moment, so I think probably more neutral for the short term, and then we'll see how kind of the narrative develops with different fiscal concerns and stuff like that. But yeah, well received has kind of bucked the trend in bonds this week.
I love it. I love it that Jay's on these treasury auctions. It's fantastic. I mean, we talk about niche avenues of finance, and there's Jay scrutinising the treasury auctions as they come through.
I'll be honest, he's like the last person out of the three of us that I thought would give a shit about treasury auctions, to be honest.
Talk to me about the bid to cover. What's your bid to cover? Yeah.
How long's your tail?
Love a good treasury auction. Tell me about it. Highlight of my week.
Mate, you've changed. Get down the David Lloyd Paul. Start talking treasury auctions to the lifeguard.
Very good.
Cool. Is that it then, lads?
I think that's all. I think let's go and enjoy the sunshine.
Yeah.
So I'm off to see if I can find a craps table in London. So I'm jonesing for a game of craps. But anyway, gents, thank you as always. You're both of you are absolute stars. Listeners, if you don't already, please subscribe and follow the AlphaPicks Substack. They put out phenomenal content, and for the most part, it's free. But lads, have a great weekend. Listeners, have a great weekend. We really appreciate you. Stay safe, keep it tight, and we'll see you all next week. Bye-bye.
Awesome. Thanks, guys.
See you later.